With the second wave forcing repeated and long period of lockdowns across the states in India, micro unsecured borrowers are expected to bear the brunt. As a result, small finance banks will be the end sufferers when it comes to recouping its loans as it lends out to this particular segment. We analyze the financial health of Ujjivan Small Finance Bank, which derives close to 72% of its book from micro unsecured borrowers. The endeavor of the bank would be to steer the book towards secured and more forming lending. Despite recent performances of improvement on quality of liability, diversification of asset book, cost optimization, and greater use of technology to stay ahead of competition, the stock has fallen by over 17% against Nifty's gains of 6%. Asset quality. Asset quality deteriorated substantially with gross and net NPA at the end of FY21 soaring to 7.1% and 2.9% respectively. In fact, the reported gross NPA was higher than what it was post-demonetization, a matter of grave concern. One of the reasons behind the high reported gross NPA was the negligible write-off. Overall, the stress was of the order of 22% of the portfolio. Ujjivan SFB's provision cover on reported gross NPA stood at 60% as on March 2021. The bank carries a buffer provision to the tune of 172 crore rupees, which is clearly inadequate in light of the second wave. Post the first COVID-19 wave, while the collection efficiency had risen from 84% at the end of Q2 to 94% in Q3, it fell to 88% in April, while it is estimated that the situation will only be worse in May. Therefore, the quantum of stress from second wave remains a question mark. Financial indicators. For Q4 FY21, disbursements were up by 96% sequentially. For the year, assets under management of 15,140 crore rupees grew by 7%, driven solely by the non-microfinance portfolio that grew by 32% YOY and now forms close to 30% of the portfolio. But the microfinance book degrew marginally. Deposits grew by a healthy 22% YOY with low-cost CASA, that is current and savings account, surging by a whopping 85%. CASA share now forms close to 21% of the core deposits as against 15% a year ago. Deposits now fund close to 91% of advances as the deposit growth was much ahead of advances in FY21. The improved composition of liability is yielding results with cost of funds down by 110 basis points in the past year. Ujjivan SFB can be beneficiary of the increased ceiling with deposit insurance now at 5 lakh rupees. The government's decision will help small finance bank like Ujjivan to garner stable retail deposits by offering a rate which is better than competitor large banks and still maintain a superior interest margin due to its high-yielding asset book. The bank has a suitable capital adequacy ratio at 26.4%. Another bright spot has been the fall in cost-to-income ratio. The cost-to-income ratio has fallen to 60% ahead of expectations, and the bank is looking to bring it down to 55% in the next couple of years by leveraging technology. Outlook. While high slippage and provision will help most investors in the sideline, the risk takers should start looking at the stock, which is now available at huge discount to its IPO valuation of 2.5 times 1 year forward book. Though asset quality woes cloud the near-term outlook, SFB remains a good stock for the long term.